Hi, Jamal. Thank you for coming on to the podcast.
Hello, no problem at all.
So, took us a little while to get this one together, Jamal. You're a busy guy, but I'm pleased we finally have. Been desperate to get you on to chat to you about everything you're doing in the property space for a few reasons. Obviously, we've met and you're a cool guy. I think we've got a lot in common, but also I just love the properties and what you do with your properties. And it is, I think, slightly different to what a lot of other people are doing in the HMO space.
Yeah,
And we've just been chatting a bit before we kicked off, and it's been interesting to start kind of finding out a little bit as to why. So we're going to explore that today. But for our listeners who maybe don't know you or know you as well as me, or know you a little bit but don't know everything, can you tell us a little bit about yourself and what you're currently doing in the HMO space and the property space?
yeah, no problem. So my name's Jemal Mazlum. Currently, a lot of people know me through the company, which is ALS Properties. Got a mixed portfolio of HMOs, single lets, a few developments, but currently quite busy buddy at the minute. We've got a nightclub slash bar. It was run as a club, it was run as a bar, which we're converting into just like a planning past, and we're actually starting that right now, which is going to be 6 flats and a commercial unit on the ground floor. So yeah, we're going to be starting that. I've also just purchased another a 1-bed apartment ground floor, which we're going to be converting that into a 3-bed SA. So I'm just dipping my toes into the SA market. Also just completing another single let, so I've got to run single let on the side. And then we've also just exchanged on we hope to be a 20-bed HMO. We've just gone into planning on that, so fingers crossed. So yeah, I'm pretty busy at the minute. So it's quite a mixed variety of projects we've got going on, but yeah.
Sounds like it.
Yeah.
So is that a really conscious part of your strategy, Jamal? Like, it's not just HMOs, or have you got to a point where you've done enough of the HMOs and it was a next natural step, or are you just trying to build quite a diverse portfolio?
No, I think it was a natural kind of progression, a natural step. I started with single lets and then HMOs, and I didn't do anything but HMOs. I really concentrated on HMOs, and then again, I was saying once I take the next step away from HMOs, I still do HMO. Just finished one not long ago, about 3 or 4 months ago. But yeah, I was thinking, to be honest with you, like I love HMOs, but I've noticed when I've been on site, I haven't got that 100% same love what I did have for a HMO. So I think I just get bored quite easily, and I like the next challenge. So I just think it's a next progression for me.
I think a lot of people in our industry, no, I'm hugely passionate about HMOs. I love creating the cool spaces, as I know you do. But similarly, I like to do the HMOs because they are a stepping stone to other things. They let me invest in other things. And so I totally get that. And I think, you'd be rare slash unusual if you loved HMOs so much that that was all you ever wanted to do. So actually, I think a lot of people will resonate with that. However, I think, you're probably a few steps ahead of a lot of people. Obviously, you're doing those bigger projects, 20 beds, flat conversions, all sorts of things as well. And it sounds easy when you just sort of reel it off, and you're obviously very busy at the minute. But what's the story behind that, Jamal? How long has it taken you to get there, and what have you actually had to do to get? I suppose from you were telling me earlier a little bit about your job that you were in before property. How long's that all taken you to do to get where you are now, and what have you actually had to do to make that happen?
Yeah, I was thinking about this yesterday actually, because um, you never think you'll get to that point, and it kind of just automatically happens. And I think because I was thinking, all the things I've learned along the way, I think I forgot a lot of them, and you do forget. I remember being in the motion, especially with the 9-bed HMO we did. I was I only had a 4-bed and a 5-bed previous to that, so then we jumped into this 9-bed, and I was still working full time. And I can remember the challenge we had on that. And I was trying to remember, I couldn't remember the challenges. And I know we had sleepless nights on that one because it was the Article 4 with no planning and no license. So, and I was still, a fairly novice investor. I wasn't, I had 2 HMOs, but one was a 4-bed, didn't need licensing. The other one was a 5-bed, so it wasn't major. So, going back to how I got to this point was When I first, if I go back to the beginning, property was always something always wanted to do. Don't know why. Not a single person in my family owns property, so I don't know why it was something I always wanted to do. And alongside my job, so I worked a 9 till 5, but it was more 8 till about 4:30. I think it was 42 hours a week. You know, barely, just past minimum wage. But I had a lot of flexibility there. My dad being the production manager allowed me to go on viewings. So I said, Dad, I've got a few viewings, can I go? He was like, yeah, cool. Break times, I was on Rightmove in his office. Books, I can remember at the time because it kind of all happened at the same time. So I brought my first single let, and at the time when I brought it, the market was still, people were still wary of the market. I didn't know no different. So I wasn't there on the crash. I didn't get into property till after the crash.
So was this 2009, 10, around that time you bought?
Yes, yeah. So people were so nervous, but I didn't know what I was nervous about. So I was just jumping in. I can remember at the time, like some of the stuff I think back now, what I did is so cringy. But we had a house we lived in. It was a new build, and we got a 95% mortgage on it, and a 5% deposit they put in. So technically, it was 100%. We didn't put a penny in. That was a new build. And then we had that, me and the missus, because I've been with her since I was 19 years old. So we've done all this together. So we was living there, and that's when I don't know how long we've got on this podcast, but to be honest with you, that's when we actually went out and brought an apartment in Bulgaria. So
you were telling me about this. I think we had a few beers, but at our Christmas party, you were telling me about this. Quite a funny story. Let's actually come back to that because that is brilliant. Yeah. So your professional, like your job then, Jemal. You left that only. You bought the first one, years ago, back in 2010. But actually, you only moved into property full time. What was it? 4 years ago.
4 years ago, yeah, about 4 years ago.
Which I think will surprise a lot of people. It's like looking at the stuff that you do and looking at where you're at now. It sounds like you should have been doing this full time for a decade to get to a position where you're doing these bigger projects and you're able to do 3-4 projects at the same time, which obviously needs a lot of cash, a lot of time, a lot of experience. So I think that'll surprise a lot of people. Was it an active decision to stay in your job for a while, or was it something that was done out of necessity? Because I suppose from knowing you and knowing what I know of you're super ambitious, clearly very good at what you do. So it does surprise me a little bit that you didn't decide to jump out of work much earlier than you did. Is there kind of a reason for that? Is there a story behind that?
I suppose being still young, I can remember like at 19, 20, 21, I still, I've never been a lavish spender, but we, when I met the missus, you try and impress her, like you said, we was flying armors and we was doing things like, and I didn't have the money, so my wage was getting swallowed up. So I didn't overly really save, and I couldn't save, don't go too much detail, but I was only living with just over £300 a week, trying to live off that. I was living at home, so for the first year anyway, until we got the new build. But then that also made me leave work a little bit easier because being on that kind of salary, it don't take much to replace it. And that's what my intention was. So we had these single lets. I think we had 4 single lets, which was just, maybe buying, I think it worked out, I was buying maybe 2 every 16 months. So it wasn't bang on bang. It was quite, and the first one we paid was 59,000. So, and we put a 20% deposit down, or 15, I can't remember at the time. So it wasn't a massive amount of money, to be fair. We needed, it was like 12,000. So we could save that on two salaries. We saved it, we saved the pot. And that's how we kind of progressed. And then I can remember with the HMO, it was a case of, we did the 4-bed. It was actually the first HMO we did. And I just did the numbers. And I'm like, bang.
That makes sense.
My monthly salary is on this HMO. I went back into work. It was about a week before Christmas. And I just said, Dad, I'm done. I said, no problem, son. See you later. I said, see you later. Never went back. Walked out. And that was it. And I would say, and I've said this to a lot of people, is the difference from when you go full time is just, it's crazy. It is crazy because you suddenly, you hear about these stories, you've got to go full time or you've got to do this, you've got to, and you think, well, how, I need the income, etc. But as soon as I went full time, that's when my net, they say your net worth is your net worth, etc. But it really is. And that's when I started meeting, within a year, the people I met, and I think, suddenly I could lean on other people, I could pick their brains a little bit, because prior to that, Instagram wasn't what it was. So I was learning everything through books. I did one course, probably going back about 7 years ago. It's the only whatever course I've been on. So, and so then I got to the point where that HMO replaced my salary, and then we was all in. But I did have, bear in mind, I had the missus with her own business, and also worked full time. So I did have that cushion still because she had an income as well. So I think that cushion does help. If I'd been on my own, maybe I would have took a little bit longer.
I think I can relate to that a lot. I remember doing my first one, and without really thinking about it, just got on with it. Obviously made some mistakes, but more or less pulled it off. And then sort of looking at the rent coming in and thinking, this is like almost as much as my professional job. And I've just been to university to study for this for 3 years and like got all the student debt. But then it still took me a while to get to the next one and so on and so forth. And it took me, I've been out maybe 6-7 years full time in it. But I think for me, the really tough bit of leaving my job was that comfort blanket of that security, all those questions about will I get a mortgage, will I be able to do this, that was the big bit for me. And I know for a lot of people it is actually being able to, or a necessity to replace the income as well, which I think is really important. But I think a lot of people actually struggle with just that kind of mindset piece, actually leaving that comfort blanket behind. Did you feel that like with the actual job and like those, not even from the monetary side, the financial bit, but actually just the security of having a job that we all kind of we place so much value on it, and sometimes I think why do we do that? But did you have that as well?
100%. And I can remember at the time, like we used to get this thing called PRP, profit related pay, and it used to be a percentage on what the company earnings are, and used to go down every year. Your profits went up. Didn't work that one out. But anyway, I can remember relying so heavily for holidays. It was like a £1,400 bonus, and it was. I can remember the whole workplace was buzzing on that week for the bonus, and that's where it gets you, because like you said, you're chasing that carrot and dangling it. I always think with employees, there's nothing wrong with it, with working for anyone if you enjoy it and you can prosper there. I couldn't go anywhere. There's nowhere else. They just don't allow it in that kind of place. I've got no university degree, so I knew I couldn't progress there. And they just dangle it enough to keep you going. They just know they pay you just that right amount for you not to walk away. And so for me, it was that, and that's why I was there for 11 years. But because I was there from such a young age, I still had time for when I did leave. But 100% that comfort blanket is massive, and I can imagine. And I've always said, if I was on double the salary, would I have left? I don't know. I think it would have been a lot harder for me to walk away from a bigger salary than a guest, and that's where the dangling carrot comes into place. Where it's comfort. Your money's coming in. It's there every week. I just get paid weekly as well, so it's there every week. So yeah, totally get that.
So you've been building your portfolio, getting some single lets, moving on to some HMOs, some small HMOs to bigger HMOs. Lots of natural progression there. Makes loads of sense. How have you been able to do that? Has it been recycling cash from deals? Has it been property values going up? Has it been saving, like a madman? Is it working with private investors and bringing stuff in? Like, how have you got from one stage to the next? And every time that leap's a little bit bigger and a bit bigger and a bit bigger, isn't it?
Well, I think this is where I think your listeners, especially the ones who are just getting into property, I know the market's different at the minute, it really is, but I didn't do anything overly clever, and I stayed the old-fashioned way. But what I did do when I bought my first one is when I started heavily reading into property, and I read a lot of the progressive books, the Ron Moore's book, the Mark Homer's books, and I was just, for me, the biggest game changer, to be fair, was when I know it's a cliche, when I read Rich Dad Poor Dad, read it twice, read it at 19, didn't overly do much, read it again when I was 21, mind was blown. From that point onwards was, people don't realise, and I know we lecture a bit like this, I lecture about this a lot, but we really, really live on pennies. And I know people say, you look at the house you might have now, but honestly, I can't express the amount of times we've been in overdraft. I think I've lived in my overdraft for 7 years without a shadow of a doubt. And we were just, everything came in. So it was just our salaries. I was like the missus named Sophie. I was like, Sophie, what you got in the bank? I've got this. Right, well, we need it to pay this. Right, there we go. How much you got left? Got nothing. Right, what have I got? Right, let's get that. And it was like that for 3 or 4 years, and that's where sacrifice comes in. And we used to sit, and people used to make fun of me in a polite, nice way at work when I'm there reading my property books and everyone else is reading the newspaper. And especially for someone like me who hasn't come from that kind of background, but it was just we save, put the deposit in, but then. So what I'm getting at is when we bought the first one was when I just started learning about buy, refurb, refinance strategy, and did the first one. And I didn't know at the time. I was halfway through, I was just about to finish the refurb when I learned about this. I was like, oh, this sounds good. Let's try it. Happened straight away. I think we paid 59 for it. We spent 8,000 on it. On the refurbs are horrendous if you look back now. Absolutely horrendous. But we did it and got revalued at, I think it was like 85, I think it was. Money came back out. I was like, this is brilliant. And then we just had a method, and again went on the second one. A little story on the second one, which is a bit embarrassing, but we went there. I think it was on the market for 80,000. Can be like a 3-bed semi now, and we it might have been 85, I think. And we went in. I said, I got Sophie to ring. I said, I'll make the offer. And we offered on it was, I think we offered 70,000, and they accepted it straight away. Now, I'm reading books at this time. I think I know it all. I said, no, done it wrong. You're not meant to get your first offer accepted. I was like, right, ring him back, send the misheard, and say we said 69,000. So bless the missus, she actually did. She ran back. We've accepted the offer at 70, but we said 69. And I think back now, like, oh my gosh, like we nearly lost the deal over 1,000. And they was like, no, you said 70. And we were arguing over 1,000 on the mortgage. And in the end, we just took it on the chin and said, oh, sorry, yeah, it must have been our bad. But these are the things you read something and you take it to gospel. When I was starting out, if you told me, if I read something in a book, I was taking that as you've got to make 3 offers. The third one has to be accepted. So I know I've gone off track a little bit, but so yeah, that's how I was just doing it. We just, the refurb came from salary, the deposit came from salaries, use a bit of credit cards to put on for the refurbs. Had friends help me out at the start as well, tradesmen. They was looking after me a little bit. And it just carried on snowboarding until we got to the 4th, and then the HMO came, and that's when it really got a little bit scary for me.
I think that is one of the most honest things anyone has ever said on the show. We talk a lot about private finance, we talk a lot about scaling up, but actually doing it and the struggle of doing it is quite different, and obviously not what we see on social media and on Instagram and things like that. I remember doing exactly so. Like, to buy the first one, I had to save and save and save and save. Like, save so hard. I was a physio, and I would tell my friends or not do certain things and sort of tell them why. I was because I'm saving. I want to buy a property, and they just look at me like I'm a madman, and almost like you don't deserve it, or like it's something that you should do later on. But that's so much sacrifice of just putting those pennies away that make pounds, and just continue to do that. And every year, I've continued to do that. A lot of people, Jemal, don't know if you heard this, but often have a target of like what they want to earn. I think once you get to a point where you've replaced your salary, you said it earlier, the goalposts just move. There's never enough. It's always the next property, the next £1,000, the next 1,000. And my goal has never been to actually earn a certain amount. It's always been, and every year, and I'll do this at this time of the year, start of the year, to actually figure out what I can save every month as opposed to what I can generate to spend. I like to know what I can save, because as soon as I know that and that's predictable, it's very easy to see when the next project's going to come. And a lot of the stuff I buy needs about 80,000 quid, for a good deposit. So you can figure out very quickly, right, this much is being saved every month. We can buy the next one then, the next one then, the next one then, and you can kind of project that cash flow. But it's hard, and you've got to be really, really strict and rigid on yourself. And in the early years, when you're trying to scale up, get from one to the second to the third to the fourth property, it takes a lot of that, doesn't it? Just saving and drawing on all of those resources. What advice would you give yourself now? So you've been doing this a long time. Start of the year, January, a lot of people talking about goals and setting new objectives for the year. And if you're anything like me, reflecting on the stuff that's gone well in the last year and also the stuff that didn't go well. I know you're a big reader and you're big on your kind of self-development stuff.
Yeah.
What advice would you go back and give your younger self? Like, no, we've talked about how it all panned out. What advice would you give yourself? Going back to then, Jamal.
I would always have a clear purpose. Again, because I think if you've got a purpose and you've got, you know what you're doing it for. Because I think if you're just going with emotion and you're doing it for the wrong reasons, I know again it's cliche, but you'll fall out of. I think you've got to be passionate about something straight away. If you're not passionate, you're just doing it to make the money. You're going to get bored and you're going to start resenting it. And I think if you start to resent anything, you'll fail. So you've got. Yeah, sorry.
Definitely in HMOs as well, I think, because it's hard work.
Yeah.
Buying the property and doing the design, that's one thing, isn't it? But actually managing the tenants, and we had a little chuckle before we kicked off today about like a couple of things like that were going off in our portfolios. But that's the reality, isn't it? So actually, if you're not passionate about it, it's definitely not the right thing. So I just wanted to pick up on that because I think there's so much truth in that.
No, definitely. And I can remember hearing her saying about. Let me see if I can word this right. It's so when you're ripe, when you think you're ripe, you're rot. And I believe in that because I've got to the point sometimes where you think, this seems so easy, this. Like, yeah, I'm getting really good at this. And then you can take your foot off the pedal. And it's happened to me twice. I've lost 2 deals. One's cost me quite a bit. And it just taking my foot off the pedal a little bit because you get really comfortable. And again, I think it's where you've got to challenge yourself a little bit and come out your comfort zone. Your comfort zone is massive. And I think we're all scared of failing, and I think that's the problem with it. I think if you're scared of failing, you never do anything. So you've just got to, and procrastination, like, I know so many of my friends who have literally do this year on year on year on and just say, oh yeah, I'm going to do it this year, I'm going to do it, and I'll advise them, and then they haven't done it. And the ones that have done it so quickly scaled up. I've got friends who watched me from the start, who was in 10 times better financial position than what I was. And didn't overly take it serious until I got my 3rd and 4th, and then I started scratching your head and thinking, wait a minute. So again, don't procrastinate. When you're ready, just go for it. If I was going back and speaking to myself, I would definitely say, again, we all say this, but start as young as possible because you can fail and you'll have time to recover from it. If the later you start, the more risky. It's risky. And I get that. I speak to 50, 60-year-olds and. I can understand their point. If they've got they've just saved up this whole pension pot and then suddenly I'm telling you to whack it in all properties. If they fail, it could really scupper them. At 19, if you fail, you just go again, pick yourself up. But I've always said failure it's only a fail if you stop. So if you just carry on, just go for it. Just literally go for it. There's so much stuff out there as well nowadays. No one's got an excuse about education. There's absolutely tons of the stuff. There's a question, just go online and get someone answer it straight away.
I think that's a nice segue into social media and stuff. I love following your stuff on social, the projects that you share and the stuff that you talk about. Very much like what we're talking about now. But I asked you sort of just briefly before we kicked off what your purpose is for social media, and I'm keen to know that the answer to that. But as well as that, Where do you learn from, Jemal? I know you keep up with that. What resources do you draw on? What sort of stuff do you get benefit from that helps you in business?
I'm massive on the podcast, so I will listen to as many podcasts daily. As soon as I'm in the van, it's podcasts. I really listen to anything else but podcasts or audiobooks, and I'll draw down as much as I can because you know what. We can be lazy, and you've got someone. There's no excuse. You've got someone doing the work for you. You've still got to obviously do your own due diligence, but there's certain people in the who do podcasts who are doing well, and I spoke to them on a personal level as well, and I know they do a lot of research, and I'm thinking they're just there giving you so much value. You're crazy not to take that up. So I'll listen to that on a daily basis. Books, social media, but the problem with social media, again, we may touch on that, is they're only showing you the good bits. So you've got to really take it with a pinch of salt. It's all right, clicking on and everyone's telling you they're buying 20 houses, every day. But you can't overly draw much from that. You can get some nice refurb ideas maybe, but Apart from that, you don't really know the ins and outs. So there's very rarely people are on there telling you that they're failing, they're struggling, and this and that. So most of my friends, like now, are about the network. My closest friends are all in property now or business related to their own businesses. So I can pick up the phone, we'll go for a coffee, and we'll just bounce ideas off. One of my business partners is heavily in property, and he's quite different. So he's very opposite to me. I've got one little computer, and I've got paperwork everywhere. I write everything down. Everything's written down. I write my goals down daily. I've been doing that since I was 25, 26. So I've been doing that for a while. Always do that. And I've got books I've just found, from 6, 7 years ago of my goals. And it's nice to read back and see what I was aiming for at the time. But I've got a business partner who's the opposite. You go around his office, he's got about 5 screens, and he just loves analysing everything, which I don't. So again, I can reach out to him, and we can have a chitter-chatter and things like that. So that's where I mostly get my stuff from. I don't listen to the news much, hardly ever, to be fair, so I don't really know what's going on.
Do you think social media, is the majority of the benefit that you take from social media in the form of network and people, or... Because I don't know whether you feel this as well, and I'm someone who's used social media a lot over the years, and obviously there needs to be a caveat to that, and in part that helps with my other businesses as well, and getting listeners for the podcast and things like that. But one thing that I felt has happened over certainly the last 18 months is that our attention is reduced even more, and particularly on channels like Instagram and Facebook's outside of Facebook groups, memes and reels and short, very engaging, visually engaging pieces of content have kind of filled the channels, and I found it more and more difficult to draw genuine benefit. I felt like I used to learn a lot more on there. I don't know whether that's just me. Do you feel the same? What do you get from social media?
I feel exactly the same. I think sometimes you don't resent it, but you feel like, why can't I get some ideas from this? I'm throwing them out. I want to get something back sometimes, but it's just look. I know people on social media, and I know what they're portraying, and I've never called out names or anything because they do. Look, everyone's got to do what they've got to do, and I get that. Some people have got to hustle, they've got to betray maybe something, but I think people are portraying things to get investors on board, and I just think that's a dangerous game to play because I said, once you start using other people's money, it's a totally different kind of. That's just different altogether. You've got to be more cautious with other people's money than you have your own, and I just think people are out there and they're learning with other people's money, and that's the thing. So they will say, look, we've got this, and this going off. It's so easy for me to pop down to some of your sites, and if you're not on social media, I whack it on social media. No one knows. No one's advisor. So I think with the social media, with someone like me, like I said, I haven't got a business on there as such. I'm not promoting the podcast because I think that's a great way to promote a podcast, obviously on Instagram, because our followers are property related as well. So I do think we engage quite a lot because most of our followers do what we do or want to aspire to do what we do. So we do engage, and I've met some great friends. My physio, who I train with now through Instagram, and we're good friends now. Roofers, builders, and things like that. I have got through Instagram, to be fair, and I actually use Instagram now as my website. Pretty bad, I know. But if anyone wants, and again, I'm kind of contradicting myself because I'm saying, you want to know what I do? Go on Instagram and have a look. But I could portray that as to be something it's not. But it's not. I know that is me.
I think it comes with the caveat that you've got to be eyes wide open on social media, haven't you? There's a lot of rubbish on there that I think as a business owner, you've got to find a way to cut through. It would just take too much time otherwise, wouldn't it? There's a lot of stuff that looks great, but actually we've got to figure out whether it's real, whether it's genuine. And I think there's a lot of responsibility we need to place on ourselves to do that because it's so easy to follow the crowd. And like you've seen it, I've seen it. But I would agree with you. The big benefit that I get from social media, unquestionably, irrespective of the fact that I think that things have changed a little bit, is still the network. Met you on there, met lots of incredible people, lots of people I now do business that I bought properties with. Met lots of people on there that I wouldn't want to meet again, if I'm honest, and I'm sure you have. But for me, I still place a huge amount of value on social media. because it connects me with people that I want to be connected to, and I've still got the choice about that, which
Yeah.
I think has been certainly for me and my businesses instrumental. Like probably now the single most important and valuable thing has been the people I've met, like my non-exec, like Jade that I do a lot of work with, like my business partners I've buy some commercial property with. We've got an amazing case study of yours that I want to talk about. But before we get onto that, let's just go back to Bulgaria because
Let's do it. Let's do it.
you told me a little bit about Bulgaria. I was genuinely shocked because I sort of what I expected from you was exactly what we've talked about now. It's like very intelligent, headstrong, very self-aware. And then you told me a story about Bulgaria, and it's like, almost sounds like usually, if I'm honest, you only hear this story in a room where someone's pitching you a book.
Yeah, 100%, 100%. Yeah, it's their entrance story, if you know what I mean, to create the scene.
Yeah. So what happened?
So again, me just starting out, we owned. What did we own? So we lived in a property together. That was it. I think I didn't have a single rental, and I must have literally read one line somewhere saying Bulgaria is the next hot place, sunny beach, place to be. I'm like, there we go. That's as much research as I need to do. Bulgaria is the place. That one line has just told me so. Let's do it. So spoke to Mrs. and gets even worse, to be fair, because I dragged her poor mum into it as well, and she ended up buying one. But to be honest with you, it's a near happy ending. So we went out there. Didn't know what the hell we was doing, and then thought, look, we need to buy an apartment. Everything's new build every day, but everything's backwards, which I'll explain in a minute. So we've gone out there and seen this new build. We looked at this company, and they had, to be fair, we did a bit of research on the company. I won't lie, we did a bit of research, and they was quite a popular company, and they had a few sites. So what they did actually put us up in one of their sites, while we looked at what they was doing. So I went there, and the footing was just started. It was a humongous place. Things with Bulgaria, the buildings are ugly. They're all made out of just like concrete council flats. They're just really ugly builds. But this one has looked pretty decent. The prices, I think we paid, so it's 3 installments, and you pay, I think the first installment was like 15 grand, and then it was like another 50. I think all in all, I think we paid around about, because the first payment was fine, the euro was 1.4, but in the second installment when the euro dropped, so it hit us a little bit. But me being me, so even at that time I look back, I still had that something, because I went out there, I looked at the kitchen, and I was like, no, this kitchen ain't cutting it for me. I'm like, but we ain't paying for a new one. Because everything's basic, you get a basic package. So all I did was change the worktop, and then change the handles. And then I was the only one with the kitchen in the whole complex. But I did that, and also it was a studio. So I was like, I'm not feeling a studio, but I don't want to pay for a 1 bed. Can't afford it. So I asked the builder to put me a sub-wardrobe, and they did. So I created a 1 bed straight away. So put two beds in the little bedroom, and then where's like a sofa bed. It took, meant to be built within a year. It took just over 3.5 years to build this complex. Got out there. I'm actually thinking I'm top dog now. Got myself an apartment. But once it was built, it was overlooking the swimming pool and a swim up bar. So cheap in Bulgaria as well, and it's actually a nicer place than what I thought. Sunny Beach. There's a quite a lively part, but it's cheap. You can get a pint. You was getting like a pint of beer out there for like 50 pence. So I went out there. The food was nice, and the time it was built, I just had my first daughter. So we went out there when she was 1. Missy wasn't even pregnant when we went out and brought it, so it shows you how long it took. And then we started renting it. And I took it to work, I pinned it up on the notice board and said, if anyone wants to rent it, and it went like hotcakes. Now, going back, we were so lucky it even got built, because the due diligence we done was 0. So we just had we did a few little bits and bobs, that was it. We didn't get a solicitor involved. You think back now, it's crazy. But we got lucky. And then for 2 or 3 years, we used it, and the rent, it was fully let for 2 or 3 years. And a lot of the terrorism kind of kicked in again, and it just went wham overnight. Didn't get a single booking for a year and a half. Now, the thing with Bulgaria as well is it's slightly corrupt. So the title deeds, we went out there to sign the title deeds, and it was like, well, we haven't paid that for it. You tell us we paid 10 grand for the apartment. paid triple that. It was like, yeah, it's for your own benefit. I'm like, well, I didn't know what's them. I was like, I'm sure that's not my benefit. Like, you're telling me on my title deed, I've only paid £10,000 for this property, but I paid nearly £30,000 for it. We now know, obviously, it's what they put through their books. Obviously, they're saying they've only sold it for 10,000 rather than 30. And I can remember we had to take, I think it was like 4,000, and it was like, yeah, it has to be cash. So we walked into the Bulgaria bank, and there's this woman, literally, with a cash machine, gets your money, puts it through, counts it, and like, yeah, there you go, and off you go, and we have to sign something. And it's just so corrupt. So we got away with it in the end. And then to be honest, when we bought our first HMO, talking about money, we ran out of money. We went from single lets to HMO, you know, the cost difference, and we were just like, wow, got no money left. Like, what do we do? We sell Bulgaria. We actually managed to sell Bulgaria through an English estate agent. Never went back out there. Sold everything with it. We had to. In the laws are different. You have to sign over the property before you get paid. So we have to like literally physically sign over the property. And I'm like, well, it's not ours. They can just turn around and say, I'm not paying you now. But it was pirated the way they did it. So they did it. Next thing we sold it for about 18 grand. I look back to money, so it's not a bad buy for 18,000. But the problem with Bulgaria is the opposite, because they're always building new blocks. So it's like a new car. So when you've got this now, they turn around and say, well, yours is 4 years old now. So it's now not worth as much. I'd rather go buy a new one. So it goes the opposite way, where in England, if it's 4 or 5 years old, it normally goes up. So it was just dropping, because there's always a shiny newer one. So yeah, we sold it in the end. Money came into our bank. I've never ever been back since.
Well, you've certainly come a long way since buying in Bulgaria. Let's have a chat about your case study then, Jemal, because this is awesome. I love it. First of all, I love the actual property and what you did with it and how you did it. It's right up my street, so tastefully done. And interestingly, and you said something earlier, but you know, I look at this and don't immediately see a HMO, and I know we're going to talk about that. But for our listeners, obviously, Jemal's case studies inside the HMO roadmap with all of the details. You know, what he bought it for, what it looked like, all the before and after photos, and all of the numbers. But just headliners. You picked this up for £200,000. It's a detached property. Picked it up for 200 grand. You did 180 grand's worth of work, so it had a massive overhaul.
Yeah.
That's a big refurb on a residential property. And the reval was 485. So you made a lot, you know, in terms of value add on this as well. And then the gross rent, it's mega. How many rooms is this property, Jemal?
6.
6 rooms, and they pay what, sort of 500 each a month, something like that?
No, I think it's around about. I think we had to drop one during, but initially it was 650 a room.
Okay, so that gives you an idea. And this is in and around Nottingham, so you know, actually, that's a really good rent for, you know, I've got property in Nottingham. That's an incredible rent for, you know, for an area around Nottingham. So the numbers are amazing. The pictures, you know, the property itself is fantastic. What's the story behind this project? How do you buy a property for 200 grand and turn it into something that's worth, you know, so much more and functions as a HMO? You know, how did you get your hands on it? You know, was it tough to buy? You know, how did you decide what to do? What's the story behind it?
Right, so the story behind this one is quite interesting to be fair. So again, this is where, so now I've started to build a bit of a network. I've met some good friends. I met a really close friend on an actual viewing, and we became close friends, and he's really well connected. So we was always out having coffees and trying to network. And then a friend of mine, he's he owns an estate agent himself, so he's heavily into property, and he overheard some people talking about it. He's out there. I'm a little bit, you know, I'm reserved a little bit. But he heard these people talking about property. So he just went straight over to them. And it was over a Costa. It was in a Costa in Nottingham. Ends up this person does a bit of sourcing and buys a bit of property. Now, this is where we've gone full circle, because this person I'm talking about in particular, he mentioned, oh yeah, I do a bit of sourcing. And then, so a friend of mine was telling him what he does, and he mentioned me. He said, look, I think you need to meet him as well. So then my mate rang me and said, I met someone that, you know, just to do property, etc. Let's have a coffee straight away, coffee meeting, because he's got something in Beeston, which we're out by. And I'm like, wow, let's do it. set up a coffee meeting, and then he actually found this property. So he'd been working on this for nearly a year, and he'd actually sourced it on. So this is where I was just like, I need it. I need this. I looked and I need this. I was like, listen, I'll double your fee. I was like, I'll double your fee if you give it me. I didn't have a relationship with him at all. And he bit my hand off. He bit my hand off with it. So we paid this fee, and believe it or not, he is now one of my business partners. So that's why it comes into full circle. And then when we brought it, because of the purchase price, the basic story was, he agreed, it was on for $290 on the market. It had evidence of subsidence, but it had already been corrected, apparently. So then he agreed a purchase price of around $240 or $250. So he was getting a fairly decent price, below the market. So that's initially what we agreed. But then they couldn't find the evidence of the subsidence of the works being corrected. But they was like, look, we've used the council, because this was going to be repossessed. So I need to go back. So it could be a repossession. It was a divorce. And we had literally a couple of weeks to buy. Now, this story, there's so many different avenues here, because then I need to go back to another point, but I'll stick to this for a minute. So they need to do a quick sale. So I'm like, look, you're telling me it's been underpinned. I can't, there's no evidence. I can't buy it relying on that. So in the end, it was like, look, we'll knock it down for 200k and it's yours. So we was just like, right. Now, I didn't have 200 grand cash, but rewinding literally 4 weeks prior, and this is where I don't know if it's the law of attraction or whatever it is. I've got a friend, again, works on the stage. He rings me up and said, Jemal, I've got this investor from London. He's got quite a lot of properties in Nottingham, but he's not property savvy. He just likes to look at the property and he buys it. He don't know about the refinance and things like this. So you need to meet him. So he introduced me on WhatsApp, and then we started talking. And then he was like, next time you're in London, we'll have a chat. So obviously I make sure I'm in London. So I ring straight back saying, I'm actually in London next week on a trip. I wasn't. I just made sure. I think I booked my dad doing Fools and Horses theatre tickets. So I booked that. I'm in London. There we go. So I'm like, yeah, I'm in London next week. Let's do it. So we met, and then he was a stockbroker, and then he liked what I pitched to him. He was like, look, I think it's brilliant. This, by the way, I've not worked with any investors prior to this, right? Not a single person. He was like, yeah, that's cool. Let's do something. Literally, I get back to Nottingham 2 weeks later. This deal lands. So it all came into place where I'd be able to say, look, we'll buy it, and we'll go to buy it in 2 weeks. Spoke to an investor. He was all over it. So that's what we did. Paid $200,000 for it. In the end, we actually did get the proof from the council that it had been underpinned. So it not been done overly great, but it had been underpinned. So we purchased it at the $200,000, paid the sourcing fee. We then went into pre-planning that to build. Initially, we were going to convert the existing to a 5-bed HMO, and then build another 5-bed HMO next to it. As like a semi-detached house. So that would be a 10-bed HMO. So the numbers was amazing. We probably could have built the semi for the same price the extension probably cost us.
I mean, that's an unbelievable story, really. Do you think if you hadn't have, I guess the way that it unravelled, there was so many things initially that you didn't have the answer to. You didn't know what you were going to be able to purchase it for. You didn't know how you were going to, or where the cash to actually buy it from. And in the time frame that it needed was going to come from. I mean, you talked about the law of attraction, and it's almost serendipitous in a way. Do you think that just almost because you're immersed and you were committed, I'm going to buy this. I'm going to find a way to. Do you think that that's ultimately why you were able to pull this off? Because I think a lot of people would have maybe had that conversation with this guy who was sourcing it, realize it was going to cost them 200, 220, 240, whatever it was. But probably have said to themselves, I don't have that sort of cash, and how on earth am I going to complete in this sort of time frame? Which you very well could have said in that same circumstance. Do you think that's a fundamental part of you and your personality and your approach to business? And do you think that that's kind of why you were able to get this deal done?
Yes, I do. I think you put myself out there, and again, going back to the start, is you've got to put yourself out there in a positive way. I went out there and I was nervous to pitch this guy because I'm not from that background. I'm not I speak okay. I'm not overly well spoken, and sorry, that's it. Yeah, so I'm not overly well spoken. So I thought he's gonna, and the Nottingham accent isn't the nicest anyway. So I'm a little bit like, I'm gonna get there. He's gonna think, "What's this kid one with me?" And like, but when I spoke to him, and I was just so honest, I think that's the biggest part of anything is honesty. And I just told him exactly what I did. And by then, I did have a bit of credential because even though I wasn't giving myself a massive pat on the back, at this point, I had a decent portfolio. And to be able to take someone's £200,000 cash, he transferred that within a company we set up straight away. And like to take that, you've got to have something about yourself, and you've got to know what. So at this point, I think I did. I kind of immersed myself and put myself out there, and I just believed I could do it. I think at that point, maybe a year or two prior to that, I wanted to dream of it. I just couldn't learn it. But I think at that point now, I was ready, and I think that's where it all kind of came together. I was ready for it, and I wasn't scared about taking something on that side either.
I think self belief is massive, isn't it?
Yeah.
These are we're in property. Actually, it's a tough nut to crack because we need so much money to make this work, and there are lots of businesses out there that would need substantially less money. Maybe they would never be quite as profitable. Maybe they're very different types of businesses, but actually we've chosen the business model that needs huge amounts of cash, and for a lot of people that is the biggest obstacle. And I think you've got to have self-belief. I tell a lot of people that you've got to have faith in prioritizing your network and actually spending time and actively developing that, and not expecting anything back, and certainly not expecting anything to come from it in the short term, because those relationships could lead to so many things, like deals, like private finance, like somebody just making an introduction to somebody else, and so many things that you can't possibly see at that point in time. But you've got to just have that faith, got to have that self-belief that if you do it and you commit to it and keep doing it, and I think that this is a massive takeaway for anybody who wants to do what you've done, who wants to build a portfolio like we have, scale it up, take it from 1 property to 2 to 5 to 10. I think you've got to have that self-belief, because at some point, unless you've been gifted a massive, family fortune, you're going to run out of cash, aren't you, Jemal? It doesn't matter how many deals, or how good your deals are, how much cash the goalposts just move, and you're going to run out of capital, aren't you?
There's that saying in there about, I think the Lord Sugar, when, the kind of wealthy guy, he runs out of cash. Like, you physically can't just keep buying properties with the cash, and you will run out, especially on high level, we'll run out quick. Like I said, 200,000 cash, 380k like that, in cash. It's a hell of a lot of money. Sometimes I probably won't have that amount in my bank forever, because I keep reinvesting it. So to have that kind of cash just sat there, it would be, this is where, you can't save that kind of cash really, unless you're on some kind of crazy salary, or, you're in some professional football or anything like that then. But for people like me and yourself, you've got to lean on, and this is where, because I wasn't overly keen working with investors, to be honest, it was never something I really thought about, but to grow, you've got to.
I think it would be inefficient as well to try and save and continue to save to that extent. I think saving 30, 40 grand, or enough for your first property or first deposit to get you on your way, that's a necessity. But I think once you've got some experience, once you've got some confidence, I think you've got to open it up and look at how you can go and raise finance, and that doesn't have to be just from private investors. Raising finance from the bank as well. We've used it. It's massively important. You've got to be very lendable, but it's got to be a priority, I think, for anybody scaling up a property business, hasn't it?
Well, I think with this one, again, do we call it luck? Do we create our own luck? But literally, as I met this gentleman, I'd just finished building a 2-bed house, detached. I owned a single let with a large garden. And again, I didn't have a clue about building a house. I just did it. I was like, right. I actually got to the foundation level myself. And then I got a main contractor to finish it. And then I went in and did a bit of design. So I just finished that, which I could show him. And I think that gave him quite a lot of confidence as well to say, look, I just built, a detached house. It was a build to let, which we did. And going back, I made huge mistakes on that. I went to, it's not an investor. I knew someone had that amount of money in his bank. Me being naive, I think the build cost, it went over. I think all in all, I think the whole build was about 170. I'm now going off track a little bit, but there's a point to it. So I just said, oh, look, you fund it, I'll give you 20 grand, I'll give you £20,000. We built it within 4 months and I had to hand over £20,000. And it was just like, I could have gone to the banks and got that cheaper. And you just don't, you don't know what you don't know at the time. And so that was a bit of a learning curve. Sometimes you just get so caught up and excited in things, you just say yes to everything. 20 grand, yeah, there you go. And, it worked out okay because I didn't have to buy the land. If I had to buy the land, I probably wouldn't have been broke even on that build. But yeah, so just going back to that, things will kind of happen in the background to give me a little bit of merit. If I had maybe 1 or 2 properties, would you have done it? I don't know.
I think it's really interesting to hear you talk about this, Jemal. There's so much honesty here that I think a lot of people will really appreciate, listening in today. And I think in so many ways, the methods that you and I have built our own portfolios is so similar. Drawing on all these resources. I've got screenshots. You talked earlier about living in your overdraft. I've got screenshots of like the most difficult times financially when I'd ploughed everything into it. Like when I was literally about £5 away from the overdraft limit, and there was nothing else. I'd borrowed cash from from the place I could. I'd really taken it to the limit. Not the most sensible thing in the world, but at that time it was okay to take that kind of risk. And actually, I don't know whether you feel the same, but I actually get a buzz from that. I like that risk. I don't want to get up in the morning and know what every single day has in store. I like to be kept on my toes. I like to be pushed. I like to be challenged. I like to feel a little bit like things could go wrong at any minute, because I feel like that's where the growth happens and that's where it's exciting.
It's so funny you say that, because my character is a little bit like, I'm very impatient, by the way. I'm the most impatient. I need everything done yesterday. So when I'm working with people, I'm like, why has this been done? Why has this been done? You need to push, you need to push, you need to push. We need answers. He said, oh, I told you 3 days. Well, let's try and do it in 2. I'm a bit like that. And exactly the same. I can remember there's a picture of me at the 9-bed HMO, and it's like midnight, and I've got work in the morning, and I'm just lying on the bed. I always have this thing where I lie on the bed after. I'm lying on the bed, take a photo, and I can remember at the time, I had messages off the missus saying, Jemal, we've got no money. Like, we've got nothing. We can't finish it. I'm like, we'll find it. And I think a remortgage came in or something, but we've never, to this day, now this ain't, I'm not saying this is a good thing, but to this day, we've never had the full refurb money in our account for any project. Because I always believe if I have to wait, I'll miss out on that. You can't time the market. You can't time when you're going to see a deal. So I just make sure the money's there, and I just make it happen. Don't get me wrong, I'm not going to buy something where I need £1 million and I haven't got nothing. But I just make sure it works. As long as I can start the project, I know we'll find it from somewhere. And I've never physically had that amount of money where I've needed to go and buy something and do the refurb. Never, not once.
Jemal, it's been a fascinating conversation. We could chat for hours and hours and hours for sure. Thank you for sharing your story. Thank you for sharing this amazing project. It's all there inside the roadmap for our listeners to go and look at in detail. All of the numbers, the reval, the loan to values, the gross and net rents, exactly how you pulled this deal off is all there. And for anyone who maybe, hasn't already connected with you, maybe he's interested in investing, maybe just wants to follow what you're doing, where's the best place to find you?
Probably Instagram, to be fair, on the ALS Properties Instagram account. I am on Facebook under my personal name. I set it up wrong, so it's under my personal Jemal Mazlum. You'll find me on there. And that's, most of my stuff is on Instagram. And I just want to, again, apologise slightly because I know we didn't overly get into the 6-bed HMO. I was rabbiting on a little bit. But it's in the roadmap anyway, so all the details are on there.
Thank you so much for coming on, Jemal. I'm already looking forward to catching up with you at some point next year with these big projects. Just before you go, where will Jemal be in another 10 years' time? What can we be expecting?
In the next 10 years, I'm really, really hoping to be doing some real big, big developments, mostly built to lets. I want to hold on to everything. So in the next 10 years, I'm really hoping to be one of the big boys. So yeah, I just want to keep progressing, make sure I enjoy it as well along the way. As soon as I stop enjoying it, it's the day I'll stop doing property.
Well, I've got no doubt at all, based on what you've done so far and your approach to everything, that you will continue to go from strength to strength. And I'm looking forward to following more of your stuff, Jemal. Thank you so much for coming on the show today.
No, thank you for inviting me. I appreciate it, and yeah, we'll catch up soon.